want to bring a couple to you, in which I think this sort of starts it off as far as if only investors could ignore the doomsayers, forget the predictions, steer clear of Wall Street, lose unreliable source information, and skip listening to their brother-in-law's stock tips, they'd be all better off. And I think there's like less errors, less making stupid decisions.
Philip Tetlock in the University of Pennsylvania proved quantitatively that people are terrible at predictions, and not just lay people. Professionals are just as bad at predictions as lay people are. And so it doesn't matter if it's Wall Street research, TikTok, Instagram, Twitter, LinkedIn. There are a ton of people who have made boatloads of money scaring people to death about what's coming. So if your plan is dependent on guessing what comes next, you're destined to fail, because we just know, anytime you look at the forecasts a year out, the challenge is that 12 months is long enough period of time for a random event to completely submerge whatever your best efforts are at coming up with a guess. What I'd rather do is put on trades that make me money, even if I'm wrong about the broad environment. And that leads us to another discussion about it's not your batting average, it's how much you lose when you're wrong. And so I set up a little bit of a cowboy account to do really stupid trading with a tiny percentage of my net worth. And the whole purpose of that is to prevent my big dumb lizard brain from interfering with my portfolio's ability to compound over time.
And there was a quote in there from Buffett I will always remember to this day. And it's like, when everybody's run out the door is when you buy stocks, which goes back to the point when fear is overwhelming the market. That's when you get your great opportunity. If you buy and you hold it, you'll get the great return, which I'm benefiting from making those low-cost index funds and holding and not getting out of to where I am today.
What I've learned over that time is if you make fewer errors, you keep more money and you perform much better. If you just figure out how do you avoid these avoidable errors, these unforced errors, you would be so much better off.